Quick update. Today I'm going to talk about why I would not buy gold at these levels. I know it's a bit controversial because gold is going up and it has been in an uptrend for the last decades and years. But I would not buy right now, and I will explain you why. So first of all, we're going to look at support and resistance levels. This is a level, this is a level, and this as well. Okay, this is a 6 monthly chart. We can see price going up, new highs. We saw price breaking in the COVID period, 2020. Then in 2023, we saw price breaking again. And this broke a little structure. And this is the flagpole. MPO is the target. Then we saw price going up. The flagpole target and the Fibonacci swing target is around the 3000 psychological level, which is a potential area of resistance where buyers are going to sell, take their profits, or shorters are going to go in the market. So let's analyze this a little bit further. We see price going up steeper and steeper until we're on the daily chart. So this is what we're seeing. I will mark this as the Trump Tariff buyers because that's happening right there. Okay, I'm gonna take a look at the RSI. This is an indicator. I think most of you know about this. I will mark the areas where price is in overbought. That's right there, there, and now it's entering in this area as well. I will mark it on the chart. It's there, then again over here, over there, most recently, and now it's there as well. What do I want to show you? Obviously the indicator was wrong because it wasn't overbought, price went up, price is higher now, so it wasn't really relevant, right? It's true, but in a way it was. So here price was too high, then it went into a consolidation phase, and we would have bought again when we had confirmation of price continuing up, which is here. Again, over here, price too high, consolidation, even if it was just for 2-3 days. Over here, price broke, we entered, going long again. Then over there, Trump tariffs, break below the lows, change of structure. However, we saw a lot of people buying, so continuation of the uptrend. Now, price is going into the overbought area again. So it broke the highs, and now the people that are in this long, that bought down here, they're gonna look for potential areas to sell. For example, the 3500 level, or maybe even the 4000 level. These are levels where people would want to sell their positions. That's why I would not want to buy right now, because this move up is really steep, and I'm definitely long on gold, but we can see something like this. Price continuing up, slowing down, people selling, price going down, looking for buyers on a recent support zone, which is the trend line or the recent broken high. Might also go low, go even higher, don't know what it means, but at some point price will retrace. It's just what happens. That's just market behavior. That's why you want to buy. If we go into the 4-hourly chart, to zoom in a little bit more, we can see price is still holding up pretty good, so it's an uptrend. If you're in this, I wouldn't sell right now. I would sell when we get a signal to sell, and I would buy when we get a signal to buy. So price could do something like this, going up, and when we have a break of structure, so it breaks down, that's where we would get out of the position, and then we see price going down further. That's why I wouldn't buy at these levels. So I'm definitely long, but it's a bit too high, and at some point people are gonna take their profits. It doesn't even have to mean that people are massively gonna short gold, because fundamentally it's long and it's an uptrend, so we wouldn't be want to selling this market. No, what everyone talking about, the trend is your friend. Yes, it's definitely true. So a position I would be willing to take potentially is, I'm gonna remove all of this, if we would see higher highs, higher lows, when price would slow down and breaks below, I would be looking to target the previous support, which is over there. Now, how would that look zoomed in? Of course, these are scenarios. I'm not saying this is going to happen, but this is what I would do if something like that happens. I would then do it something like that. That's price going up, down, creating a lower high, breaking the trend line, breaking the lower lows. That's where I would enter. So I would enter somewhere like there, Stop above the trend line, above the previous swing, target all the way down there if you would want a better risk reward. Could also do something like this, because if this trend starts over there, price might also do something like this and then go down. These are scenarios. This is not what's happening now. It's a scenario of what price might do. I might also do something like this. I might also enter, consolidation till the end of the month and then a push up. I might also enter here. Again, same principle. This would be the structure. I would enter on the break, target, for example, this level, stop down here. These are scenarios. These are all scenarios. I'm giving you ideas how to trade gold, because it's a trending asset for sure. So for now, we're not trading this. We might even trade this all the way up through the highs again when it breaks. But for now, I would not buy. Not now, not today, not on this. So we need confirmation. And we don't want to buy when price is on the lower end or is breaking to the upside. Not when it is up. No, not when it is at the all-time high. I would definitely not buy right there. You want confirmation. So that's my view on gold. Thank you for listening. If you like the way I talk about it, analyze the pairs, please subscribe, leave a comment and like the video. Thank you for listening and see you next time.